Verizon Communications Inc, ticker symbol VZ, is a telecommunications giant. The company is based in New York City but was incorporated in Delaware. Verizon boasts the largest wireless network in the US with over 143 million subscribers. If we have a look at the current stock price, and the performance over the last few recent years has not been pretty at all. It's had a 52-week high of 51.36 and a low of 33.72. Now sitting in the $35 range. Is it worth buying at that enticing 7.47% high yield? Let's have a look at the dividend history. Looking at historical data, Verizon has had 18 years of dividend growth and 22 years of consecutive dividend payments. We can see the regular payments from 2000. And if we scroll up, we can see the nice increases all the way up to where we are now. It's not a growth stock, but the consistent growth of the dividend is really the enticing part. Now let's have a look how the stock has performed against the S&P over the last few years. If you invested $10,000 specifically on July 10th, 2013, this would have bought you approximately 197.86 shares at the closing price of $50.54. Then as July 10th, 2023, if you'd reinvested the dividends, the value of your investment would be approximately $11,412.08. That is only a 14.08% increase. This is an average total return of just 1.33%. For dividend payments, you would be approximately receiving $207.35 quarterly and $829.40 annually. In that same time, if you'd invested the same amount in the S&P, and reinvested the dividends, your value would be $31,918.77, a total return of 219.22%, a huge difference. If we did the same calculation over 20 years and reinvested the dividends, we would have approximately 787.89 shares, an approximate value of $27,569.92. That is over a 175% increase, with an average annual return of 5.2%. And for the dividend payments, it would be $261.22 quarterly and $1,044.91 annually. In that same time, if you invested in the S&P, your value would be $63,499.27, a total return of 535.51%. The best days of Verizon were clearly in the 2000s and before this. I can see why Warren Buffett sold out of his position. Something to think about when choosing your investments. Let's have a look at the financials. The market cap is $150.92 billion. Cash to debt, minus $4.75 billion, but it does have $2.23 billion in cash. Payout ratio is 50.35%, which is okay and still room for a lot of future growth. Revenue is consistent, trending upwards. EBITDA is the same. Free cash flow in the green, which is good to see. Net income and EPS down a little. Dividends have consistently increased. Shares outstanding, not good to see. It's gradually creeping up after a significant jump back in 2013. Return on capital decreasing as well, which is not a good sign. Let's check the first quarter. Yeah, Q1 is down as well, so the downward trend continues. If we have a look at Q1 earnings, a bit of a mixed bag. Year on year sees revenue, EPS and EBITDA down. Net income and profit margin are up. Although EPS was down, it still beat Wall Street estimate by 1 cent. What about going forward? During the quarter, Verizon witnessed robust demand for fixed wireless. Consequently, it had 437,000 net broadband additions during the quarter. Looking ahead for the year 2023, Verizon expects wireless service revenue growth to hover between 2.5% and 4.5%. EPS is seen landing between $4.55 and $4.85. If they achieve this, I expect the stock price to move up back into the 40 plus range. Now, what do the analysts think the 12-month forecast of the price target could be? CNN Business have a 12-month price target of $41, 15.8% upside from where we are today based on 20 analysts. TipRanks have an average price target of $43.46, 22.73% upside. And Zacks have an average buy of $43.63, 17.51% upside. So across the board, significant increases from where we are today. Let's have a look at value investing. Dividend cash flow model has a fair price of $54.50, which is very, very high. Peter Lynch formula has a value at $25.52, so miles apart based on their fair price. As an average of the two models, that comes out at $40.01. With a 20% margin of safety, we're looking at the $32 range. A buy price I would definitely be a lot more comfortable with. Overall, it's got good points and bad points. If you can get in at the lower price, could it go lower than that? Well, it would have to have a terrible couple of quarters. But if it does achieve its targets that it's set out to do this year, I expect it to go a bit higher.